Are you aware that less than 15% of Americans will have enough savings to retire comfortably? The secret to building real wealth lies in smart investing, like the strategies taught by financial guru Robert Kiyosaki. In this video, we're diving into Kiyosaki's proven real estate investing secrets to unlock the path toward financial freedom. Don't forget to like, subscribe, and hit that notification bell for more game-changing financial tips. Let's get started. Secret number 1. Focus on cash flow, not appreciation. Most people think getting rich in real estate means buying a house and waiting for it to go up in value so they can sell it for a big profit. While that can happen, it's a bit like gambling. You're hoping for the best. Robert Kiyosaki teaches that a smarter way to build wealth is to focus on cash flow. What is cash flow? Cash flow is the money left over each month after you collect rent and pay all your expenses on a rental property. Think of it like your paycheck from owning real estate. If a house rents for $1,500 a month and your mortgage, taxes, and other costs are $1,000, your cash flow is $500. Why is cash flow so important? Provide steady income. Consistent cash flow puts money in your pocket every month, helping you pay bills and live more comfortably. Covers unexpected costs. Things break. Cash flow gives you a cushion for repairs or those months when you don't have a tenant. Imagine two investors. Sarah buys a house hoping it will increase in value quickly so she can sell it. If it doesn't, she might lose money. John buys a house with good cash flow. Even if the property value stays the same, he makes money every month and can use the cash flow to invest in more properties. Secret number 2. The power of leverage. Leverage is a fancy word in the investing world, but it's actually a simple concept. It means using other people's money, OPM, to buy bigger or more expensive things than you could afford on your own. In real estate, this usually means using a mortgage from a bank. Why is leverage powerful? Control more with less. Let's say you have $20,000 saved. You could buy one small rental property with that cash. Or you could use it as a down payment on a $100,000 property with a mortgage covering the rest. Accelerate growth. The bigger the property or the more properties you own, the more rent you can collect and the greater your potential cash flow. Leverage helps you get there faster. Real-life example. Imagine two investors. Emily buys a $50,000 house with cash. If the property increases in value by 10%, she makes $5,000. Mark buys a $100,000 house using a $20,000 down payment and a mortgage. If it goes up by the same 10%, he makes $10,000 even though he put down the same amount of cash as Emily. Leverage comes with risks. You owe the money on the mortgage no matter what happens to the property. However, smart investors who use leverage wisely can grow their wealth much more quickly. Secret number 3. Tax benefits are huge. Owning real estate comes with some amazing tax breaks that can save you a ton of money. These are like special gifts the government gives investors to encourage them to provide housing for people. Here are some of the biggest tax benefits. Deductions. Lots of the costs of owning rental property are deductible, meaning you can subtract them from your income when you file your taxes, which lowers the amount of tax you have to pay. Things like mortgage interest, repairs, insurance, and even travel to check on your properties can be deducted. Depreciation. This is a bit trickier, but here's the idea. The government lets you pretend your property is slowly losing value over time, even if it's actually going up. You get to write off this depreciation each year, reducing your taxes. 1031 exchange. This advanced strategy lets you sell an investment property and buy another one without paying taxes on the profit from the sale, helping you grow your wealth tax-free. Real-life example. Let's say you own a rental property that brings in $20,000 in rent, but you have $15,000 in deductible expenses. This means you only have to pay taxes on $5,000 of your income, a huge savings. Secret number 4. Don't be afraid of debt. Most of us have been taught that debt is bad and something to avoid at all costs. But Robert Kiyosaki teaches that there's a crucial difference between good debt and bad debt. Bad debt. This is debt you take on for things that lose value or don't make you money. Think credit card debt for clothes, fancy vacations, or a new car that goes down in value the second you drive it off the lot. Good debt. This is debt used to buy assets that put money in your pocket. Real estate is a classic example. You use a mortgage, debt, to buy a rental property that generates cash flow every month. Why good debt is a powerful tool. Build wealth faster. Imagine trying to buy a rental property entirely with cash. It could take years to save up. Good debt lets you start making money from real estate right away. Your tenant pays it down. As renters pay you each month, part of that rent money goes towards paying off your mortgage. It's like they're helping you grow your wealth. Example: Investor A spends 15 years saving up $100,000 to buy one rental property outright. Investor B takes out a mortgage right away and also buys a $100,000 property but starts earning rental income from day one. Even with mortgage payments, Investor B likely has more cash flow. Secret number 5, importance of your team. Real estate investing seems like something you could do alone, but the truth is, it takes a whole team of experts to be truly successful. Think of your team like a sports team. Everyone has their own role to play in helping you win. Here are some key members of your real estate team. Realtor. A good realtor helps you find the perfect investment properties, understands the local market, and can negotiate the best price. They are the experts on buying and selling real estate. Mortgage broker. They shop around different lenders to find you the best interest rates and terms on your mortgage, saving you money. Accountant. A tax-savvy accountant helps you make the most of the amazing tax benefits of real estate and can keep your finances organized. Property manager. If you don't want to deal with day-to-day tasks like finding tenants or fixing leaky faucets, they handle it in exchange for a fee. Secret number 6. Focus on education. Robert Kiyosaki believes that knowledge is just as important as taking action. You can't become a successful real estate investor just by jumping in. You need to learn the strategies, understand the market, and know how to do things correctly. Why education matters. Avoid costly mistakes. Real estate investing involves money and risk. Proper education helps you minimize that risk and avoid mistakes that could cost you thousands. Spot great deals. Knowing what makes a good investment property and how to analyze potential deals is crucial. This helps you find the hidden gems and avoid the bad ones. Where to get educated? Books. Kiyosaki's own Rich Dad, Poor Dad is a classic, but there are tons of other great books on real estate investing. Courses, in-person or online courses, can take a deep dive into specific topics or strategies. Look for ones taught by experienced investors. YouTube. Channels dedicated to real estate investing are a great and often free source of information and tutorials. Real-life example. Imagine two people who want to become real estate investors. Investor A doesn't take the time to learn, buys the first property they see, and gets stuck with a money pit that costs them thousands to fix. Investor B spends a few months reading books, taking an online course, and learning from experienced investors. They understand how to find good deals and end up with a profitable property with excellent cash flow. Remember, knowledge without action is useless. Kiyosaki's secrets can change your life, but only if you use them. Start small. Research a neighborhood. Analyze a deal. Even just read a book. Let's get out there and build wealth. Don't forget to like, subscribe, and hit that bell so you never miss an episode. If you're ready to ditch the 9-to-5 grind and build real wealth, you're in the right place. We're just getting started.